Hi guys, it's another new week again for the weekly futures review from our academy, idea investor Doctor Academy. So today we will review how the market performed for the last week, dated 18 to 22 of February. So and also we will discuss how we're going to trade for the next week. Alright, so our futures review will only cover the 5 major futures market, which is FKLI, FCPO from Malaysia, and then the crude oil, gold, and Dow Jones from US. Okay, so if you trade the market which is not included in our futures review, please feel free to comment or PM us or contact by our phone number 011-5353-7589. Alright, so below this video we got provide our channel link, and all these channels are free. Okay, we got include our YouTube, Facebook, Telegram, and iTrade, and we will share our ideas about the future trading, the strategies, and also the latest market news, and all are free. So please feel free to join our channel, and also please like and share our channel to let more people know that we have this free future trading sharing platform, okay, to let more people to have a better experience to trade futures. Okay, so without wasting any time, we see how the market behaved for the last week. So this one vertical line is pointed for the last Monday. So we can see here for FKLI is a very quite strong rebound week for FKLI. Okay, we can see here a strong return of buyer. So finally it's follow the US. Okay, because previously the US keep going up and rebound, but the FKLI stick in a sideways trend, and now finally it's break up. So it's more bullish. It's a bullish week for the FKLI. And then we look at the FCPO. Okay, FCPO unfortunately is more weakening week, but because it is break the lowest since near 1 month low. Okay, near 1 month low. Right, so the technical indicators also closing down, so may trigger technical correction in a rebound stage. Overall is still in a rebound stage, but we can see here the trend is start to weakening, so it's a high possibility to enter a technical correction for the FCPO. Okay, it's not so bullish week. Okay, we can see here it break a high and then continue to go down and then stay below the middle line of the band. Then we look at the crude oil. Okay, crude oil too is a bullish week. Even though that the buyer is not the buyer is not so strong, we can see here the candle is not so long, but it still create a higher high and higher lows. Okay, hit the highest since November of 2018, and also form and confirm a inverted head and shoulder bullish signal. Okay, so it's a bullish week for the crude oil. And then we look at the gold. Okay, gold is a mixed signal in the week. Okay, because we can see here the gold first break new high. The new high since April of 2018 is very bullish, but enter RSI overbought correction, and then it's dropped down, testing. So it's failed to sustain 1,350. So may also enter RSI overbought correction. Alright, but it's still it's a bullish week since we got higher highs and higher lows there. And then we look at the Dow Jones. Dow Jones is more or less same with the crude oil. Okay, it's slowly go up without the long green candle. Okay, but it's still going up, and then also hit the high since November to December of 2018. Okay, so it's more to a bullish week. Okay, a bullish week. Okay, so from all the 5 markets we can see here, most of the markets are doing good, except that the FCPO is weakening, but the others market is doing good by still approaching the RSI overbought. So there may be a short-term technical correction before it start to going higher. Okay, but we as a traders can focus on the buy setup first, because all the trend we can see here is going up one. Okay, only the FCPO, but only the possibility of short-term technical correction. Okay, so how we gonna trade for the next week? We look at the FKLI first. So first of all, of course, we need to look for the buy setup first, since it's hit more than 3 months highs. And then we can see here the strong return of buyer. So for me, I will look for the buy signal above this level, which is 1730, which is 50% of Fibonacci retracement level. So we can see here it's already sustained above the 38.2. It may testing the 50 and also the 61.8 Fibonacci level. So if we can sustain above this 50 Fibonacci retracement level, it's possible to test the 61.8, which is also around the previous high. Okay, here. Okay, so we can look for a buy setup first, but also we have to see, because now the RSI is on overbought. All right, so if the index can't sustain above 1730 for a few days, it may enter a technical correction first. So for aggressive trader, you can try to sell above 1720 and then cut loss above 1730. Okay, this is for aggressive trader who expect that technical correction in short term. All right, so for trend following traders, still we look for the buy setup above 1730. And then for the CPO, okay, CPO we can see is a weakening signal, so we can start look for a sell setup. Okay, according to the Fibonacci retracement level, we can look at the level at 61.8 to 38.2, which is around 2190, 2142, and also 2094. So for me, I will sell at low. Below 2234, I will look for the sell setup, because it created a lower low and hit more than 1 month low. Okay. And then despite that, the trend is still in a rebound trend, but we can see here the trend is start to going weak. Okay, so unless there is a rebound wave which higher highs and higher lows, okay, and before that happen, I will stick to a sell setup below this level 2234. Then we look at the crude oil. Okay, crude oil, like I mentioned just now, is a bullish inverted head and shoulder, and also sustained above the 38.2 Fibonacci retracement level. So and also the Bollinger Band is expanding upside. Okay, technical indicators is also closing up, so it's a bullish signal for the crude oil. We can look for the buy setup first. Okay, for confirmation above 58. Okay, for confirmation above 58. So unless there is a lower highs and lower low wave in shorter time frame, then we switch to the sell setup, because the RSI now is approaching overbought. Okay, but we wait for the price action for confirmation. Okay, for now we focus on the buy setup first. Then we look at the gold. Gold, we can see here in daily chart there is a RSI bearish divergence. Okay, so maybe it may likely to go into a technical correction. For me, I see a short-term support here around 1323. So because this level, I will look for the sell setup. Okay, and then to see whether it can sustain above 1350 resistance level. Okay, so below this 1323, I will look for the sell setup first. Okay, I aim for a technical correction in short term, but if you are a trend follower, it's still you need to look for the buy setup. Okay, because the overall trend is still going up one for form with the higher highs and higher lows. And last, we look at the Dow Jones. Okay, Dow Jones, like we mentioned just now, is more to bullish. So, but RSI is approaching overbought zone. Okay, so for me, I will look for a buy setup above 2608 to this level, and look for a sell setup below this level, 25753. So pay attention to this level, because we can see here in shorter time frame, we look at the hourly chart. Okay, it start entering a sideways. So we can see here the rebound stage is weakening due to the RSI overbought. So I wait for the breakout here. So above this 26082 buy setup. Below this level, I will look for the sell setup. Okay, let's summarize these 5 markets. Okay, so as a conclusion, we can see here most of the markets are bullish, but with RSI overbought, so there's a potential technical correction in short term. So look for the buy setup and also switch to sell setup if break below the price level we mentioned just now. Okay, only the CPO, the momentum is already confirmed become weakening, so we can look for a sell setup. Okay. So this will be all the sharing for this week. So thank you to borrow your time to listen my sharing. So if you got any problem, please feel free to comment, PM, or contact us by this phone number. And also we will see you guys next week for the next sharing. Okay, thank you guys. We see you next week. Thank you.